You think $1 million coin is the ultimate goal? You believe a flashy blockchain project can change the entire world? But what happens when one day no one wants to buy, no one wants to sell? What does that value even mean anymore? Welcome to Crypto Billionaire, the channel where we strip away the illusions of the financial and crypto markets to uncover the raw, unfiltered truth. Liquidity is the lifeblood, the heartbeat, and the breath of every market. Remember this: markets don't collapse because of price. They collapse because liquidity disappears. And opportunities only belong to those who know where the money is flowing. In this video, I'll take you through shocking stories of market meltdowns like FTX and Terra Luna, hard-earned lessons that will make you a smarter investor, and most importantly, the real key to market survival. Not price, not hype, but liquidity. If you're serious about investing, this video will change the way you see the market forever. Don't forget to hit that subscribe button so you never miss a single strategy that will help you survive and thrive in this volatile space. The flow of value. Why liquidity is the true core of every market. Understand the engine that powers financial and crypto markets to invest smarter. Introduction. Value versus illusion in the digital age. In both traditional finance and the crypto space, most investors focus solely on intrinsic value, long-term narratives, or the hype behind a coin or stock. But ignore liquidity, and you're ignoring the single most critical. Changpeng, the founder of Binance, once said, "Liquidity is the lowest layer of value, but it's the most important." If an asset is worth millions, but nobody is willing to buy or sell, that value only exists on paper. Liquidity is the bloodstream of every market. Without it, the entire financial system, from Wall Street to blockchain, would collapse. Part 1. Liquidity, the foundation of all value. 1. What is liquidity? Liquidity is the ability to convert an asset into cash or trade it without causing massive price swings. A highly liquid asset can be bought or sold instantly at near-market prices. Examples: Bitcoin is highly liquid because millions of buyers and sellers are active 24/7. A $5 million luxury villa that takes 6 months to sell has low liquidity, even with high intrinsic value. 2. Why liquidity matters more than the asset itself. Liquidity reflects market consensus. Value exists only when enough people agree on it. A liquidity gives investors flexibility, enter or exit positions easily. Liquidity builds trust. A liquid market attracts more capital and creates network effects. In March 2020, during a massive crypto market crash, liquidity dried up across exchanges. Bitcoin's price fell over 40% in one day, not purely because of fundamentals, but because there weren't enough buyers to absorb the sell orders. Part 2. The tokenization illusion versus harsh reality. Blockchain promises to tokenize everything, offering seamless, transparent trading. But tokenization does not guarantee liquidity. 1. The problem of fractionalizing physical assets. Imagine tokenizing a $10 million mansion into 1M tokens. In theory, anyone can own a piece. In reality, legal barriers, real estate ownership can't bypass traditional legal systems. Fake liquidity. Without enough buyers, markets freeze. Realty and Proppy, 2 real estate tokenization projects, faced major liquidity challenges. Despite brilliant ideas, trading volumes remain low. 2. Blockchain can't fix market psychology. Even if an asset is tokenized, liquidity still depends on demand. No interest equals no liquidity. Part 3. Why financial assets are perfect for blockchain. 1. Naturally divisible assets. You can own 0.0001 BTC and enjoy full benefits. Stocks and bonds are already divisible by nature. 2. Blockchain boosts transparency and speed. All transactions are public. Removing middlemen reduces costs and increases efficiency. USDC is a prime example, a stablecoin pegged to USD with extremely high liquidity, acting as digital dollars across the entire crypto market. Part 4. Liquidity, the lifeblood of crypto markets. 1. When liquidity vanishes. The FTX collapse in late 2022 showed liquidity's power. Panic withdrawals drained the exchange. With no buyers, prices tanked even before proof of insolvency. A liquidity shock rippled through the entire market, dragging Bitcoin prices down. 2. Liquidity creates opportunities. High liquidity coins like BTC and ETH remain attractive because liquidity itself protects their value, even during volatility. Part 5. Liquidity-based investment strategies. 1. Prioritize liquidity over hype. Avoid illiquid coins and stocks. 2. Diversify. Keep a portion of your portfolio in stablecoins or cash. 3. Follow smart money. On-chain whale activity reveals where liquidity is moving. 4. Don't be fooled by high prices. A $1,000 token without buyers is worthless. Part 6. The core lesson. Trust equals liquidity. Liquidity isn't just numbers. It's collective belief. When trust collapses, liquidity evaporates, and billion-dollar assets vanish overnight. Example: Terra Luna had a $40 billion market cap, but after UST's depeg in 2022, liquidity dried up in days. Luna crashed from $119 to near zero. No liquidity, no value. Conclusion: liquidity is king. Blockchain is not magic. Real value comes from liquidity and community trust. With liquidity, markets thrive. Without it, everything crumbles. Smart investors start with liquidity analysis because it's the true lifeline of any market. Liquidity is not just numbers. It's the pulse of the market. It's trust. It's survival. Coins with billions in market cap can fall to zero overnight if liquidity disappears. If you want to survive and win in this game, look beyond price, beyond hype. Follow the money flow. Liquidity is your key to true financial freedom. If this video gave you a new perspective, hit that like button, subscribe to Crypto Billionaire, and share your thoughts in the comments. Together, we'll build a disciplined, resilient trading community. Thank you for watching. See you in the next deep dive.